Thanks very much for having me here today, and the rest of our, not the rest of our team, but some of our team who are here today as well. Well, I'm the face of the business. They're very much the engine of the business. So if you've got a chance to have a chat to them this morning at breakfast, then please make the most of it. I've got some slides here. Morgans were very efficient, asked me to send through the slides yesterday before midday, which I did. About 15 minutes after I sent through the slides, I got a phone call from Robbie and Ruth saying, "It's about your slides." I said, "Yeah, is there a problem?" No, the slides are all good. It's just a lot of data, a lot of information, a lot of numbers. I was like, "Yeah, is that okay?" "Well, tomorrow's crowd, they're more about stories." I said, "Okay." So maybe just talk a little bit more about the journey you've been on, and really talk up how big you're going to be 5 years from now. I said, "Okay, that sounds quite good." So unfortunately, I've got a slide pack which has got a lot more data in it, a lot more numbers and information, but I'll try to, I guess, reflect a little bit more on the journey, not just myself, but we've all been on at Infragreen, how we've got to where we are today, which we're incredibly proud of. We very much love what we're doing. We think we're doing something quite special, not just in the world, but also financially, and talking to you all as investors as well, or hopefully soon to be investors. Really want to bring out some of the highlights that we've already been able to generate on what's been a pretty short journey so far. And then also talk a little bit about, where we're going in the future, not so much this year, but talk about what I expect this company to look like 5 to 10 years from now. So just reflecting on Infragreen and how it all started. It really started in 2021, so not that long ago. For me, I was reflecting on what I love doing, and that is growing businesses. As James mentioned, a number of times in my career, sought to go out and grow businesses. Fortunately, he focused on the two more positive ones. Don't worry, in my early days, there were some failings as well, but between the good ones and the bad ones, they've all provided me with a lot of lessons. And in setting up Infragreen, what became really clear to me was I didn't want to just make an investment into a company. I wanted to establish a platform where we could invest into multiple businesses and bring to bear not just capital, but really bring to bear capabilities. Our passion is very much around growing businesses. We love meeting with founders that have done incredible jobs in taking their businesses from 0 to 1, which is often the hardest part of the journey. And then we come in and say, we'll see how we can actually take it to the next level. How can we help them scale up their business? And so when they come and talk to us, typically they think they're looking for capital. But after a number of sessions and meetings and dialogues and discussions, and lunches and dinners, and a heap of time together, they quickly realise that Infragreen is not just about capital, it's also about capabilities. And that's where we get most excited. The people in our team have got some extraordinary capabilities when it comes to scaling businesses and growing businesses and working in businesses. And what we love doing, more so than just putting the capital in, is actually putting the time and effort in with those businesses. When I reflect on perhaps the two businesses that James mentioned that I founded prior to Infragreen, one being Studio Velocity, which is a Brazilian spinning business that probably no one in this room has heard about. But I can assure you it's a very successful business, and People In, which is a workforce management business. There's so many different lessons that I learned on that journey. And for me, in setting up Infragreen, it's all about putting to work and putting to action the lessons that I learned on those journey. And if I wanted to summarise what the three key things are that I've worked out when it comes to investing in businesses, it's three key things. One is it's about great people. Two, it's about great industries. And three, it's about great opportunities. And if you can bring those three things together, then doesn't mean you're guaranteed to have a successful investment at Infragreen, but it means you've got a pretty good chance of having a successful investment. And so as I talk through the businesses that we've invested in Infragreen, I'll perhaps focus a little bit more on those elements, the great people, the great industries they're in, and the great opportunities that have emerged as we've invested in those companies. So in terms of talking a little bit about Infragreen, so what we do is we own and operate sustainable infrastructure businesses, and we do it across two main industries, one being recycling and waste, and the other being clean energy and the energy transition. Just maybe to focus on those two industries, I mentioned great industries as being critical. What makes those industries so great? Firstly, on recycling and waste recovery. Over the last 3 decades, there's been tremendous development and evolution in those industries. A couple of things have happened. One is just general acceptance, community acceptance and community desire to create more circular economies and to lead more towards sustainability. If you go back in my lifetime, there weren't recycling bins, right? And now we've all got recycling bins, and that's just the tip of the iceberg when it's come to recycling. There's now so many different products that that waste can actually get recycled into. There's so much technology that has been developed and continues to be developed that means that we can recycle products now that we weren't able to previously recycle. So much innovation has come into the waste and recycling sector, and it's now coming in a much more cost-effective manner so that we can actually implement this technology. You combine that with community acceptance and government drive to actually implement circular economies, and that is what has driven so much growth in the recycling industry over the course of the last 3 decades. However, there's still a lot of waste that's not getting recycled. There's still a lot of waste that ends up in landfill. In fact, that's obviously where most of the waste actually ends up. And so when you look forward over the next 20 years, I can't tell you exactly what those technology developments are, but we know that there's technology that's going to get worked on, that is getting worked on at the moment. There's probably already in place at the moment, it's just not cost effective, that is going to come to bear. Things like tyres, which typically haven't been able to be recycled, are now being able to be recycled. Hard plastics weren't able to be recycled in the last 5 years. They're now able to be recycled. Soft plastics, they're not quite there yet in terms of cost-effectively recycling soft plastics, but they're working on that, and that'll come into place for sure over the course of the next 5 years. So it's a dirty industry, but it's a really exciting industry just in terms of the amount of growth and technology and innovation that's going into that sector. Clean energy and energy transition. Everyone here in this room knows right about this, so I won't spend too much time talking about it, except maybe on the energy transition piece. I think everyone's known for a long time that we're heading towards clean energy. It's just a question of how we're going to get there and what the final system, and by system I mean power generation, power transmission and power storage, what that's going to look like and what are the sources and what are the products going to look like. And I think that's where we're seeing most of the exciting opportunities, because that's the part of the market which is showing a tremendous amount of niches where there's growth opportunities in certain niches, and that's where when I talk about one of our companies, Energy Build in particular, that's been able to play. And I think just on transition, there's also, just given there's more uncertainty around that, you've got to get through the headlines. You've got to look to what's actually happening in the industries. And once again, that's what's providing us the opportunity. So I'll talk about Meriden Energy, which is one of our peaking power plants. The opportunity we had to buy into that business was because no one else really wanted to go near it. People were concerned around what transition was going to look like for peaking power plants. You fast forward, and it's only been a year since we made that investment. Already people have accepted, and community acceptance and political acceptance of the absolute need for peaking power plants to support a renewable power generation focused system. So in terms of those businesses, the 4 businesses we've got and the size of our portfolio, it's a really critical point. These are decent sized businesses. So they generated 56 million in profit across those 4 businesses on 200 million in revenue. And when you look at our share of profit, that was $21 million from those businesses. And here are the 4 companies. And I'll go through each of them individually in a second. So I'll just touch on them now. We've got 2 in recycling and 2 in energy. One is Pure Environmental. For those familiar with the listed markets, very similar to the old tox-free business. It's a hazardous and regulated waste business, based predominantly in Queensland and West Australia, got 8 locations. Minimet, which is a metals recycling business located in Christchurch, Victoria and West Australia. And then on the energy side, we've got Energy Build, which is an energy partner to new build construction. So it supplies and installs energy products and energy services to that new build construction market. And then Meriden Energy, which is our peaking power plant. In terms of the growth in our business in general and the opportunities, I'll touch on this before digging back down into those businesses. One of the things I love about Infragreen is that in our team, we're all highly ambitious people and we like growing. So we're always looking for things to do. We're always looking to further our impact. The way Infragreen is set up, we have multiple avenues to further our impact and to grow our business. And we like to think of it through 4 pillars. And over the last 4 years, this is what we've been executing on. How have we grown our business from nothing 4 years ago to 25 million in EBITDA that we're forecasting this year? Well, it's through executing on these 4 pillars. Organic growth, so really strong organic growth coming through in the businesses. We've chosen businesses which are operating with strong tailwinds behind them because of the industries they're in. They've got really identifiable strategic initiatives they can execute on to achieve that growth. And they've got a history of demonstrating that as well. And so collectively, that portfolio has been growing at 33%, grew at 33% last year, and this year is expected to grow at a similar rate. The second avenue for growth is increasing our exposure to the existing businesses. As I said at the outset, the profit from the businesses we're invested in generate over $50 million, but our share of that is forecast to be 25 million this year or 21 million last year. Increasing our equity share is another way that we've grown our earnings in our business. Typically, we increase our equity share once a year when you look back over the last few years with the businesses we're invested in. Bolt-on acquisitions for the current businesses is something that we work very closely with the waste and recycling businesses. We've been able to execute a number of bolt-on acquisitions, been strongly EPS accretive when we've done those acquisitions because we've got multiple investments. We're looking at multiple different acquisition opportunities. We executed on 2 last year. We executed on a similar number the year before. At the moment, in the existing portfolio, we've got term sheets out on a number of opportunities. So once again, we're hopeful and that we'd execute on a similar number of acquisitions this year. And then finally, through expansion into new platforms. So at the moment, we've got the 4 platforms. When I think through to what does our business look like, 5 years from now, I'm hoping to see a double amount of that in terms of the number of platforms. That would be 1 major platform acquisition per year. So what does that all sort of look like when I add all that up? Well, our current portfolio generating 50 million of profit, growing organically at over 20%. Then you've got bolt-on acquisitions, the ability for us to increase our equity ownership and do new platforms. There is a very clear pathway for us to get towards 100 to 150 million of profit in our business over the course of the next 5 years. We've gone from 0 to 25 forecast for this year over the course of 5 years. So once again, to go from there to over 100 is very clearly identifiable to us as a business. And that's with a small team. I think when I think back to where we started, it started with Paddy and I. It was the 2 of us, and we took it from nothing to about 10 million in profit. We've added people, obviously, over time, but it's an incredibly scalable business. So I don't feel like we need to add a lot of headcount. We've got the capabilities already in-house that are going to be able to see us achieve those growth expectations. There's some charts. They're all heading in the right direction. I won't spend any time on them, Robbie. Pure environmental, just talk a bit about the businesses. A couple of things I'm really proud of with this business. One is on the people side. So when we bought into this business, it didn't have a management team. It had some really capable site operators and general managers, but didn't have a management team. And at the forefront of anything we invest in is great people. So this is one of those cases where we knew it was a great set of assets. We knew it was in a great industry, regulated waste, high barriers to entry, really strong growth coming through, but it didn't have the great people. What I'm most proud of here is how we at Infragreen, we partner with the opportunities. And over the course of a year of discussing with the original owners of the two assets that were to become the base of Pure Environmental, collectively we came up with a strategy of bringing in an exceptional management team that could take what was some really good assets and turn it into a much bigger business. And so after we invested, we went and found that management team, we brought them into the business. And since then, and that was we invested in 2021, we brought the management team in 2022, and fast forward to 2025, the profit's gone from 10 million to 31 million in 2025. Got an exceptional management team. We've increased the number of locations from 2 locations to 8 locations. So it's a real testament to, I guess, how Infragreen interacts with the businesses that we're invested in, and also just the importance of having great people in the businesses that we're invested in. This business is just getting started. It's still just Queensland and West Australia. We're going to expand into other states. This company could very much double again in profitability, given the size of the market out there, and just through regional expansion. Not doing anything different, just doing exactly what we're doing, just doing more of the same. Minimet Recycling Group. Interesting. When we started looking at this space a few years ago, we quickly realised it's a pretty unloved market. It's not that exciting for any people who've been to a scrap metal site. I feel sorry for you. It's not an inspiring place, but what I see and what's generated in a lot of these cases are rivers of gold, both figuratively and actually in terms of some of the metals that are getting recycled there. What has happened in this industry in the last few years is technology has come in so that you can better process and recycle metals. You can get metals out of scrap that you previously couldn't get. And if you've got access to international markets, and that's what we do, we sell 100% of our offtake internationally, then you're going to get incredibly high prices and good margins for those metals. The other thing that's happening in this industry is green steel. So green steel is manufactured out of scrap metal. Didn't exist 15 years ago. Now there's hundreds of green steel manufacturing plants around the world. They're called electric arc furnaces. In Australia, there's 7 which are currently under development. These electric arc furnaces, they need scrap metal. So they are all out there talking to scrap metal guys like ourselves around how they're going to lock in us as a scrap metal supplier. So suddenly we've got incredible strategic importance to these electric arc furnaces. We've already signed it's a non-binding MOU with one of them, and there'll be more to come. This is not a short-term thing, it's a medium-term thing. It's the type of thing that will be, by the time they're developed and built, it'll be 2027, 2028. But it's just testament to this industry and some of the really positive tailwinds that are happening in this industry. Energy bill. It's in the first 6 months of this year, it's going to do well over what it did for the whole of last year from an earnings perspective. And certainly our forecast is for it to grow from 4 million of earnings to 12 million this year. It's great when every month is a record month in a business. We like that. It makes doing our job relatively easy. It is underpinned by the National Construction Code. The National Construction Code got changed about 18 months ago, such that there's new regulations around climate efficiency. We're an energy partner to new build construction. So you need to be compliant with the National Construction Code when you build a house. Most of the volume builders in Australia are our clients, and we're their exclusive energy partner. So any energy products, whether that be panels, batteries, or smart meters, or EV chargers, they're coming through us. And that range of products is increasing. So we're selling more products to them and coming up with more types of products and services such as virtual power plant type services. We're doing more stuff around batteries than we've ever done before. So great business, tremendous leader, a real visionary for that business, operating in a fantastic industry. And it was a great opportunity when it came through. It was a lender had ended up with equity in the business as part of their original investment. They wanted to focus more on lending, and so we bought the equity stake off them and put some money into the business, and that's how we got in there. Then finally, Meriden Energy, a peaking power plant. As I said at the outset, peaking power plants are on the nose, especially a diesel-fired one, when we first started looking at this, and we first started looking at it about 2 years ago. Once again, this was an off-market deal. All these opportunities have been off-market, and so we're buying through non-competitive processes. You tend to do much better deals for yourself as a buyer if you can do it through a non-competitive process, and that was certainly the case with this business. Things have changed in the last 12 months for the positive with this business. Although in the short term, it just gets paid based on a government regulated rate, so it's incredibly predictable. What has been uncertain is what the pricing is going to look like from 2031 and beyond. Over the last 12 months, there's been various papers released by the West Australian government as to what that pricing is going to look like. It's looking incredibly compelling. They've really recognised that as you have this transition from fossil fuel to renewable power, you need to have peaking power plants, plants that can be turned on and be providing power within 15 minutes, and in our case, within 5 minutes. Just an essential part of the grid. And so that pricing, the long-term thesis around this asset has really firmed up over the course of the last 12 months. So that's the current portfolio. Hopefully you got a sense for not just the numbers and the charts, but also, I guess, some of the people behind them, some of what's happening in the industries and how the opportunities actually eventuated. When you look at it sort of more broadly, very sustainable earnings base, positioned to growth due to tailwinds, and really benefiting from that Infragreen partnership approach where we get invested down into the businesses and work with the businesses. And most importantly, underpinned by some exceptional management. When I talk to these businesses, I just don't do justice to how good the CEOs and the CFOs and the senior management team really are down in these businesses. When I look at my action plan every quarter, Martin looks at his, everyone in our team looks at his. There's one consistent thing, and that's talent pooling. We're all focused on talent pooling because underpinning each of these businesses is great talent. At some point, I'd love to be able to get more of the investors to see some of the CEOs and the people in the site so that they could actually get a feel directly of some of the great people under our businesses. Financial highlights. Just check how I'm going for time. I've sort of gone through most of this. Go back to this chart once again, the right direction. The cash flow is probably one of the things that we are really focused on as a business. I think it's really important. We grew our cash flow from 6 to 8.5 million. We weren't expecting that amount of growth, but some of the initiatives we did through the year came off for FY25, expecting that to grow to 12.2. Eventually, forecasting to pay dividends this year. I understand retail investors, dividends incredibly important, and we will be focused on paying dividends in the business going forward. Once again, a bit more on cash flows, how the green chart, the green line being how the cash flows have grown. And then just on debt, just briefly, so much growth in these businesses, we don't need a lot of financial leverage. The growth is there, so we're at 1.3 times debt to EBITDA, and that's forecast to drop to 0.6 times. That's all down in the business level. We've got no debt at the Infragreen level. So just in conclusion, really strong momentum coming through in the business. It's been a really big year, but looking forward to having a bigger year this year. There's so much we've got in front of us to execute on it. Team's pretty fired up. We're excited. We're proud of what we're doing. We love that we've got some runs on the board. we're here to make everyone happy. We don't ever want to disappoint anyone. We hold ourselves to account. We've got a great set of values. We believe in the purpose. There's so much good stuff coming through in the business at the moment. We're so excited about what we can deliver, not just over the next 12, 18, 24 months when you go through a listing, everyone gets very focused on that, but very much we look at companies like Infratil, right, which is an $8 billion company. And that listed with a market cap under $100 million about 25 years ago. We look at companies like Brookfield. It's been around for 100 years, maybe a bit longer, but it's such a successful infrastructure investor. I know the guys at Stone Peak, they've got 80 billion invested in infrastructure. It was started in 2010. That was 15 years ago. There is so much opportunity in this sector, and it's great to be set up with, I think, is what is a really good platform that has proven that it can execute on it, and we're just going to keep doing more of the same to eventually take us to that end goal.